Hello friends, welcome to Ecoholics YouTube channel. My name is Avinash and in today's lecture I'll be discussing with you economics current affairs for 12th November 2024. I have selected two articles from the Mint newspaper. Both the articles are very important. First article is discussing the recent trend of foreign portfolio investments and foreign direct investments in India, right? So this is very important because as a part of theory, I will always teach you the importance, the meaning, the concept, etc., of foreign direct investment and foreign portfolio investment. But what is happening in the last 6 months or last 18 months, that is something that can be picked up only from current affairs discussion. So this article is one of the most important discussions that I do. Second article is also important. As a theoretical discussion, we always talk about trade agreements. We always talk about regional trade agreements, bilateral trade agreements, role of these agreements in any country's growth and development. But what should India do in present times regarding, let us say, joining or not joining regional comprehensive economic partnership is concerned? So I would say that this is also a very important article. So these are the two articles that I'll be discussing in detail in today's lecture. I have given these questions for you so that you can attempt these questions and be ready for these kind of questions in the examination. Examination के अंदर कोई बहुत ज़्यादा अलग अफलातून क्वेश्चन नहीं आएगा, इसी प्रकार के क्वेश्चन आते हैं, right? So if you practice these questions on a daily basis, एक दो questions, if you practice on a daily basis, then you will be in the right direction, right? The direction will be broadly be right, your preparation will be right, and you will be confident in the examination, right? So I was not able to take the lecture yesterday, right? Because I was not feeling well. I'm very sorry about that. I couldn't inform you. हमारा lecture का timing is such that if anything is not good at my end, it becomes very difficult to inform you well in advance, right? Because of the early morning lecture. So sorry about that. Right. So let us start. Let us speak about the FDI inflows into India. Natural सी बात है that you have to be knowing certain numbers regarding what is the inflow of FDI in India. You have to be aware of numbers. Without numbers, you will not be able to write answer for this question. Okay. Anyways, so let us start by talking about some FPI numbers also. Right, foreign portfolio investors. Right. So for FPI is that kind of money which is essentially coming in the stock market. Right. Or money which is getting invested in government debt. Right. So that money is called foreign portfolio investment, stock market kind of investment, investment into government debt or corporate debt, right? So that kind of investment is foreign portfolio investment. On the other hand, foreign direct investment is more like your factory kind of investment, right? So somebody is coming and putting up a production facility. Somebody is coming and picking up a more than 10% stake in a particular company. So that kind of investment is a foreign direct investment. So if somebody is coming up and setting up a factory or a production facility or is picking up a more than 10% stake in any company, that would classify as FDI, right? Anybody is just coming and putting up an investment of, let's say, less than 10% or a small amount of investment in stock market or in the equities market, right? Or in the government debt market, that kind of investment will be foreign portfolio investment. Foreign direct investment is long-term investment, right? If it comes for a fairly long period of time, right? It's very stable. It will bring in technology. It will bring in management skills and practices. It will bring in a lot of these things. On the other hand, foreign portfolio investment, this is short-term investment, right? This doesn't really bring in a lot of technology, a lot of management skills, right? It can go out as quickly as it has come. It is very volatile, right? If you find that the Chinese stock market is giving you better returns, you'll pull your money out of the Indian stock market and invest your money in the Chinese stock market and vice versa, right? So foreign portfolio investment is also referred to as hot money, right? Why is it called hot money, right? Flowing in and flowing out very quickly, very volatile. So from a theoretical point of view, this is the bare minimum that you should be able to know, you should be able to understand regarding foreign portfolio investment and foreign direct investment. Now that this little bit of theory is clear to you and you have a fair sense that yes, FDI is factory kind of investment and FPI is stock market kind of investment, right? So naturally a country such as India would benefit from the inflow of both these kinds of investments, right? But we would benefit a hell lot more if we can get a lot of foreign direct investment. Just a last academic point before I discuss current affairs. China, for the last 30 years, has been able to attract significant quantum of foreign direct investment within itself from abroad, and as a result of which the kind of mega factories, giga factories, tera factories that exist in China, they do not exist anywhere else in the world so easily, right? China has huge production capacities, and that is thanks to the kind of FDI that has flown into China year after year for the last 30 years. Now let us discuss what is happening vis-a-vis India, right? Now, foreign portfolio investors, they have been selling a lot of Indian equities. They have been selling a lot of Indian stocks. If you have been keeping a track of the Sensex or of the Nifty in the last 1.5 months, there has been a decent amount of correction in both these indices. That is because FPIs, that is foreign portfolio investors, they have been net sellers of Indian equities. They have offloaded nearly 1.1 lakh crore worth of shares in the last month of October itself, right? Now the point is that stock market is correcting, right? And maybe the stock market boom is coming to an end. You never know whether the boom in the stock market or the increase in stock prices, is it going to settle down? Will it take a pause? Will there be a correction? You never know what is happening. But the way things have evolved in the last month and a half, apparently the stock market boom is, taking a pause. At least that much I can say, right? How long that pause is, only God knows, right? FDI can there be, we are having our own challenges, right? So if you look at, again, first if you look at net FPI flows, what are net FPI flows? So foreign portfolio investment can come into the country, foreign portfolio investment can go out of the country as well, right? So people are bringing money into the country, people are taking money out of the country. You may be, for example, an Australian fund investing in India. There may be a hypothetical Canadian fund that may be pulling money out of India, or vice versa, right? So if I look at net FPI flows, which is inflows minus outflows, right? So that is around $10.3 billion. That is around $10.3 billion between April and August, right? And if you compare this April to August period of this year with last year, so last year net FPI flow was $22.9 billion into India, and this year the number is down to $10.3 billion, right? So they will hardly ever ask you a question on FPI, but just keep this in mind that the net FPI flow in the current financial year is nearly half or less than half of what was there in the last financial year same period, April to August. That is about FPIs, right? Now let us talk about net FDI flow. Again, let me help you understand the meaning of the term net FDI, right? So direct investment can come into India, okay? Direct investment can go out of India. For example, Reliance or Aditya Birla or Infosys or anybody, Mahindras, they may acquire an asset abroad, right? So that is direct investment going out of India, right? Similarly, that somebody can bring money into India and attract or purchase an asset in India. So for foreign direct investment can flow into your country. Domestic direct investment can go out of your country from India to, let us say, Germany or Japan or wherever, right? So money can be flown into your country, there can be an inflow. Money can flow out of your country, there can be an outflow. Both of these things are possible. Plus minus karenge, we will get the net FDI flow ka idea, right? So if you see what is happening so far as net FDI flow is concerned, right? So in the April to August period, again, in this year, we have attracted around $15.4 billion of FDI as compared to $8.4 billion in the same period last year. So this is, let's say, nearly double, right? But don't start celebrating just as yet that we have attracted nearly double as compared to last year. Last year was pathetically bad. If you're doing well as compared to last year, that's not a great compliment for yourself. Let's look at a longer term period. Let's look at a longer term period, right? Now, this is something which is very important for you to understand and note, right? That 2024, this is the second lowest level for net FDI in this 5-month period, right? So this is the lowest and this is the second lowest in the last 7 years period, right? We are not even looking at a long-term period. We are just looking at last 7 years period, right? In 2023, in the entire 2023, if you go by the World Bank data, net FDI flows into India, that was just $28 billion, which is lowest since 2012. So this is very, very important. This is something that you have to highlight. You cannot highlight immediate term trends. You have to highlight the medium term trends in your answers as well, right? If you look at FDI as a share of GDP, again, this is extremely important, that as a share of GDP, this is 0.8%. In 2023, we attracted merely 0.8% of our GDP as compared to 2.4% in 2020 and 2.1% in 2015, right? It's not that India alone is suffering, the entire world is suffering, but we couldn't care less about the world, right? Because China was not looking at the world when they were growing fantabulously well. China was looking only at themselves, right? So you cannot give this global argument. You shouldn't give this global argument because the globe does not have democracy, demography, and whatever that other third D was, right? You are having it, right? You are the one who has to grow fast. So I wouldn't really advise you to try to hide behind this number of the fact that global FDI is falling, hence FDI in India is falling, right? We have to be able to attract FDI on our own strength, and our strengths are unique. Keep that in mind. Anyways, global FDI flows were also less than, so if in 2022 total FDI, global FDI was $1.8 trillion, in 2023 that was $847 billion, right? So there was a huge decline, okay? And in general there has been a decline. In general there has been a decline, right? Now these are some of the numbers which you are familiar with, right? So this is the 2023 number, $8.5 billion, very low, and this $15.4 billion, right, in the year 2024. So again, this is very uninspiring, right? If you see India, so India is much lower than Brazil, much lower than China, much lower than, of course, this is East Asia and Pacific as a grouping, so we cannot compare, right? But our graph, right, this is not an inspiring portion of the graph, right? This is not what we want to see. Okay, this is what the problem is. Now let us try to dissect the problem and understand where the problem is coming from. I hope I am clearly audible to all of you. I hope that you all are understanding everything that I am saying to you guys, right? If there is any doubt, please feel free to ask. I'll be able to address. I can see your doubts, right? Now let me explain the word repatriation to you, right? Let me explain the word repatriation. So repatriation essentially means that you're taking your money back to your parent country, right? That is what you mean by repatriation. You're taking your money back from, let us say, the Indian market to the parent economy from where the money had originally come from, right? So that is the broad meaning of the term repatriation, right? Now, a lot of capital repatriation is happening, right? Foreign investors are taking their capital back to their home countries, right? So if you look at this April to August period, so $20.7 billion was withdrawn by foreign investors. Forget about what Indian investors are doing in terms of taking direct investment out. Foreign investors, they have pulled their own $20.7 billion out of the country in April-August period, right? So if you compare, right, if you compare the monthly repatriation over the past 15 months, so 50 to 80% of inflows are being repatriated. So if 100 rupees is coming in, 50 to 80 rupees is going out, which is quite high as compared to, let us say, 20 to 50 rupees that was getting repatriated for every 100 rupees invested in the pre-pandemic era. So the important message that you have to take out of this particular discussion is that repatriation has increased in the post-pandemic era. This is an extremely important point for you to highlight. You don't need to explain more than this to the examiner. Examiner will understand. Examiner पढ़े लिखे लोग हैं. अगर आपको समझ में आ गया है, and if you can write it in this language, then the examiner doesn't need elaboration. So if you can mention it exactly like this, that monthly repatriation over the last 15 months has ranged around 50 to 80% of gross inflows, significantly higher than 20 to 50% in the pre-pandemic era. And this is not just an Indian phenomenon, this is a global phenomenon. Examiner will understand what you're trying to say. Now, why is this happening? Why is this repatriation happening? Why is it that people are taking their money back to their home country? Because of this US Federal Reserve's decision to increase the interest rates in America, right? So the key interest rates have been increased by over 5 percentage points, right? So what has happened is that given the fact that interest rates in America are higher, to take advantage of those higher interest rates, you can say that that money is going back to the US, right? So there is this trend which is seen, right? That when interest rates in the US rise, right? So repatriation gets a boost up, right? And apart from that, US is also forcing the supply chains out of China. US is forcing supply chains closer to itself, right? So looking at all of these things, right? टोटलिटी के अंदर अगर आप देखेंगे, so because of higher interest rate more than anything else, repatriation is happening. Once US का interest rates rationalize, normalize, this repatriation things can slow down as well, right? And apart from the fact that there is something called as friend shoring which is being encouraged, right? So what is friend shoring, right? So friend shoring basically means that take your investments to a friendly country. So India being a friendly country, take your investments to India. So India should benefit, right? So the fact that repatriation is happening from India as well, this should be striking because India is a friendly country. If you are pulling your investment out of China, it is understandable. If you are pulling your investment out of India, that's not understandable, right? So we need to really see what is happening over here. But one thing is for sure, repatriation is happening. Higher interest rate can be one of the causative factors. US trying to rewire its supply chain can be another causative factor, but we need to understand better, right? That why is this happening? So it's okay for you to not have all the answers in your answers. You should know what is happening, and this is good enough for you. Now let us look at outward investment, right? Like I mentioned to you that when we look at net FDI, so what are we looking at? We are looking at dollars coming into the country because of inflow of FDI. We are looking at dollars going out of the country because of repatriation. We are looking at dollars going out of the country because Indian conglomerates or Indian corporates are also taking dollars out of the country to invest abroad, right? So if you look at outward FDI or outward investment by Indian entities, so between this April to August 5-month period, Indian entities have invested $8.7 billion abroad, which is nearly 1.5x jump from $5.2 billion invested abroad in the same period last year, right? So this is a new record. Record breaking investments are being done by Indian entities abroad. So apparently Indian entities have a lot of money not to invest in India but to invest abroad. And I'm not saying it sarcastically, but maybe they are seeing some strategic value in terms of being able to invest abroad. And maybe they see certain advantages that they want to take, for themselves. So if you look at this entire first 8 months of the calendar year 2024, outward FDI is around $15 billion, right? That is higher than last year, right? That is higher than last year. So where is the money going, right? Where is the money going? Singapore is the top destination, right? Singapore is the top destination. Apart from that, US and UK are also important. So around 24% of the total investments that Indian firms have done, that has gone to Singapore, followed by US and UK, right? Which are the Indian conglomerates which are doing reasonably well in terms of outward FDI? So Aditya Birla Group, for example, they announced a 50 million investment in a chemical plant in Texas, right? In April, Infosys acquired 100%, right, of a German-based auto-focus engineering R&D firm for 450 million euros, right? So that's what you need to keep in mind. Apart from that, which are the sectors in India which are doing well in terms of attracting FDI and what's happening in the recent years? So if you look at manufacturing's performance, we have 2 consecutive years of decline of FDI inflows into manufacturing. This is 2021, sorry, this is 21-22, this is 22-23, and this is 23-24. So we have 2 consecutive years of decline. Similarly, in computer services, we again have 2 consecutive years of decline from 21-22 to 23-24, right? In financial services, it has been up and down. It has been up and down. It has been very volatile. In communication services, again, we have 2 consecutive years of decline. In retail and wholesale trade, again, it is up and down, but in general, there is a decline, right? So this is what you need to know as of now, right? In around 650 words, this is the maximum that I can tell you, that this is the status of FDI into India and a little bit also about FPI into India. This is telling you the as is story of what is happening. I hope that this is clear. I will move ahead to my next article. The next article is written by Mr. Ajit Ranade, an economist that we tremendously respect in our discussion, right? And if he says that it is time to reassess the rejection of the RCEP trade bloc, then I am sure that this is the right time to reassess the RCEP rejection by India. And not only Ajit Ranade is saying it, right, but the CEO, no less, CEO of Niti Aayog has also said the same thing, that India must reassess rejection of the RCEP trade bloc. Now, for those who are new to economics and new to this subject, let me explain to you what is Regional Comprehensive Economic Partnership. So this Regional Comprehensive Economic Partnership is basically a trading agreement between 15 countries. Which 15 countries, by the way? So 10 ASEAN countries, plus their 5 free trade agreement partners. Who are those 5 countries? China, South Korea, Japan, Australia, New Zealand. These are the 5 countries: China, South Korea, Japan, Australia, and New Zealand, right? So ASEAN, so 10 ASEAN countries plus 5 of their trading partners, free trade partners, right, are a part of RCEP. There were supposed to be 16 members. India was also supposed to be a part of this RCEP grouping, but at the last moment, when the RCEP agreement was to be signed, at the very last moment, on the 11th hour of the 11th hour, India decided to not join the RCEP. That is, the Regional Comprehensive Economic Partnership was something that India decided to not join. So India was a part of the entire negotiation. It was a part of the entire deal from day 0, except on the last moment we decided that we will not join the Regional Comprehensive Economic Partnership. Now this article discusses this at length. So let me start this article, right? So 5 years ago, exactly 5 years ago, we were on the verge of joining the RCEP, but abruptly decided to not join, right? 7 years before 5 years. So from, let's say 2012 to 2019, right? From 2012 to 2019, we actively participated in the negotiation, right? RCEP was nevertheless signed and agreed upon by 15 nations. RCEP, even without India, is the world's largest bloc trading community, right? RCEP countries, they represent 30% of the world's population, right? And they represent a huge chunk of the world's trade and world's GDP, right? And the share of the world's trade and the share of the world's GDP amongst RCEP countries only going to increase. It's only going to increase, right? And should India choose to join RCEP, then RCEP's importance in terms of population, in terms of trade, in terms of GDP will only increase, right? Why did India not join RCEP? The most important reason is something that I'm highlighting to you over here, right? The most important reason is that India feared that joining the RCEP would be like having a free trade agreement with China. And as it is, Chinese trade is hurting us badly. If we have, let us say, a de facto free trade agreement with China, we will hurt more badly. Let me explain this to you. If you look at India's trade balance with China, and what is trade balance? Import minus export. If you look at this import minus export trade balance with China, it is hugely negative for India, because we are importing significant amount of imports from China, goods from China, and we are exporting far fewer goods to China. So as the result of which, our trade balance vis-a-vis China is hugely negative, right? And on top of this, if we have a free trade agreement with China, which gives Chinese producers greater access to the Indian market, because what is free trade? Free trade means giving access to your market to, let us say, your trading partners. So if we give a freer access, more access, greater access, open access to the Indian market to Chinese manufacturers, so our imports will increase that much more, and that will hurt our domestic industries. and it will be hugely negative for us. That is what we thought. So probably because of that we didn't sign, or mostly because of that we didn't sign the RCEP. We didn't become a part of the Regional Comprehensive Economic Partnership because we were afraid of what will be the impact of Chinese imports, right? Why were we afraid? Because in the RCEP, right, there is something called as rules of origin. And in the RCEP, what is it said about rules of origin? RCEP countries, they cannot discriminate on the basis of rules of origin. That we cannot say that, अच्छा, साउथ कोरिया से माल आ रहा है, so we will allow it to enter our country. अच्छा, लेकिन ये चाइना से माल आ रहा है, so we will not allow. So rules of origin will have to be ignored amongst RCEP countries eventually. That was the idea, right? So you cannot have country specific rules of origin. If the material is coming from within the RCEP countries, you have to allow it access. You cannot say that, okay, if the material is coming from China, I will not allow it. You cannot say that anymore, right? So how was this fear of India addressed? So this fear of India was addressed by saying that, okay, you can take 15 years, right? You can discriminate against Chinese goods for 15 years. After 15 years, you will have to allow, country agnostic rules of origin. You will have to follow country agnostic rules of origin, meaning that if the material is coming from within RCEP, you will not discriminate, right? So we had China specific clauses, right? And backloaded or delayed tariff reduction for China origin goods, right? So the idea was that, okay, you don't give free access to China immediately. You don't reduce tariff for Chinese goods immediately. You take your time. You take, let us say, 15 years, right? So the question that Ajit Ranade is asking, and I am also asking is, and the examiner will also ask, is that is 15 years not a good enough time to prepare your industry to compete with China? How much more time do you need, right? How much more time does the Indian industry need to compete? Is 15 years not sufficient, right? There were sector specific lobbies which scuttled the deal, which didn't allow the deal to go ahead. One of the biggest sectors, strongest sectors that lobbied against this deal was the dairy sector. The dairy sector in India said that small and marginal farmers will lose out, will not be able to compete, because countries such as New Zealand, which are industrial milk producers, they will inundate the Indian market with imported milk, and Indian dairy farmers will lose out in a very, very big way. Now, if you look at India's per capita consumption of milk, it is way below the world average. There has to be a nationwide campaign to increase milk consumption. That will also be helpful to meet our nutrition needs, right? There is a significant scope for enhancement of demand for milk, right? We can tackle the Kiwi supply of milk through a variety of different ways. We can strengthen our own sector. We can do a lot of those things. So should we have allowed the concerns of dairy sector to not let India join the RCEP is the question that is getting asked over here. For example, steel, non-ferrous metals, chemicals, automobiles and plastics also had concerns. But this kind of protectionism, right, is this justified, right? Is the fear of manufacturing sector getting hollowed out in India justified? Can it not be addressed via different mechanisms? Now there needs to be a study is what everybody is saying, and it's not just government critics who are saying this, right? Niti Aayog CEO no less BVR Subramaniam is saying that India should join RCEP. Why is BVR Subramanian saying that India should join RCEP? Because he's saying that there is a loss to your MSMEs. Your MSMEs, they are not becoming a part of the supply chains of the world. They are not becoming a part of the regional value chains. So they are not getting that opportunity to produce in India that they would have otherwise gotten had they been a part of RCEP, right? So whether to become a part of RCEP or not should not be decided only looking at the number of trade deficit. Trade deficit is just one metric. You should look at whether investment will come into India because of RCEP, whether jobs will be getting created in India because of becoming a part of global value chains and regional value chains, right? We should look at a variety of indicators and then decide, and not just on the basis of trade deficit, right? In 2022, no less than Arvind Panagriya and Praveen Krishna indicated, right, that there hasn't been any significant deterioration in India's trade deficit with ASEAN countries, despite the fact that we have had 10 years of free trade agreement with them, right? So there has been no deterioration in India's trade deficit, right? And even if you are having a trade deficit, so what? right? You're having a trade surplus with US, you're having a services surplus, right? You're attracting a significant amount of FDI and FPI. What are you afraid of, right? So even if you are having a trade deficit, you are having significant investment coming into your country and will keep coming into your country if your fundamentals are strong, if your macros are strong. So do you want to be held hostage to this trade deficit number all the time? Is the question that this article is asking you, right? Now, given the fact that US के अंदर Donald Trump has come, given the fact that he has appointed Robert Lighthizer, right, as as whatever, right? So, and this Robert Lighthizer is not a very big fan of importing into America, etc., etc. So exporting to America is also going to be equally difficult. So you need to have your other options ready, right? You cannot wait for crisis to emerge and then look for other options, right? So the article is concluding by saying that, boss, it is very important for you to expand trade. You have to look at the RCEP region. There is significant export potential for agricultural products, for pharmaceuticals, for services over there. And it will be favorable for our MSMEs, favorable for our employment as well, right? RCEP is an easy deal to be a part of. RCEP doesn't impose labor standards. RCEP doesn't impose environmental standards. Go and try to do a free trade agreement with Europe. They will impose labor and environmental standards. Go and try to do a free trade agreement with UK. They will impose a labor and environmental standard. Go and try to do a free trade agreement with America. They will, they will arm twist you so much so that you will probably not be able to do a deal, meaningful deal at least, right? So if you look at the labor and environmental standards of other deals, other global deals, like for example, comprehensive and progressive agreement for trans-Pacific partnership. So there, the kind of labor and environmental standards that have been agreed upon are very stringent. So RCEP तो बहुत ही बच्चू deal है, कच्चा limbu deal है in those terms. So we should be a part of it is what these guys are saying. It will help build supply chain resilience. It will foster trade amongst partners, right? Regional value chains will come in. So geopolitical cooperation and stability will come in, right? You will have greater economic integration with, let us say, Australia, New Zealand, South Korea, Japan. So your East Asia policy, जो आप बोलते हैं ना, act east, you'll actually be acting east. Right now, we are not even looking at east. Earlier, we had a look east policy, which in 2014 became an act east policy. So this is our time, is what these guys are saying, right? If you go by the research that is being done, right? So authors are saying that there has been a significant expansion of trade in intermediate goods. That a lot of member countries are participating in regional value chains, right? And whether it is textiles, apparels, motor vehicles, food sectors, हर चीज के अंदर एक regional value chain create होने लग रहा है within the RCEP countries, right? So the idea over here is that we must consider RCEP, right? Trade intensity can increase, right? If you look at the China plus one strategy of global investors, so global investors are investing in Vietnam, Malaysia, Indonesia, apart from China, and all these countries are a part of RCEP. So if India also becomes a part of RCEP, then we come on a level playing field in terms of tariff, at least with Vietnam, Malaysia, Indonesia, with respect to rest of the countries in RCEP, right? So it will be easier for us. This region RCEP, it has attracted $460 billion of FDI, right? That's a significant amount of money. Now, if India tries to have bilateral trade deals with each of these countries, that is less efficient. India tries to have a bilateral deal with regions, with blocks, that will be less efficient, right? We should think in terms of joining, right, RCEP. We should also think in terms of joining CPTPP. Rather than staying out of these trade deals, we have to learn to be a part of these trade deals, right? Why are these trade deals happening? Because of the weakness of WTO, because of the weakness of multilateralism. WTO is dysfunctional for all practical purposes. Why? Because US and other world powers are not interested in strengthening WTO anymore, because they do not see WTO helping them out. WTO was important till you wanted countries such as India, China, and etc. to open up their markets so that Western countries can sell their goods and services. WTO is not important when India and China wants to open up the Western market so that they can go and sell goods and services. So WTO is dysfunctional because Western countries want it to be dysfunctional. And multilateralism is not functioning because multilateralism is not helping the Western countries. Now, when multilateralism is not working, you cannot have multiple bilateralisms coming into its place. That will be very inefficient. So let us focus region by region, and that is where RCEP is coming in, right? So whether it is domestic competitiveness, whether it is employment in value chains, whether it is investment inflows, there can be a significant positive impact of RCEP. We of course have to do our internal reforms. We have to do our housekeeping well, right? We have to invest in skilling, in education. That will ultimately determine the productivity and the competitiveness levels, right? We have to invest in infrastructure. We have to invest in digitization. We have to invest in land banks. We have to invest in factors of production. We have to clean up our laws. We have to clean up our roads. We have to clean up our infrastructure. We have to do a lot of those things, I'm sure, right? But staying out of these blocks is not going to help anybody. Yeah, it may help some narrow subsectors, right? But this is the exact kind of policy that India used to adopt before 1991, protectionist policies, right? And where did they land us? It didn't land us anywhere, right? So we have to reevaluate our policies is what these articles are telling you. So both these questions are for you to try and attempt. Try and attempt these questions here itself, right? I've given you a broad framework. Try to do a little bit of your own reading and attempt this so that when you face a similar kind of question in the examination, your speed will be 1.5x faster, your confidence will be 2x higher, and your momentum will be significantly better than what it would be otherwise. We'll meet tomorrow again. Until then, thank you so much. All the best and see you tomorrow. Bye bye.